Hi, it's Canwell from Simply Investing. In this video, I'm going to show you how to make money just from dividends alone. So what are dividends and what's so great about them? Stay tuned. When you buy shares in a company, you become part owner of that company. And as part owner, you're now entitled to share in the profits of that company. So companies will pay out part of their profits to the shareholders in the form of dividends. So let's say, for example, we have a company that's paying a $1 dividend per share, and you own 1,000 shares. So you will receive $1,000 every single year for as long as you own those shares and as long as the company continues to pay that dividend. Dividends are automatically deposited into your trading account. So you can spend that money if you wish, or you can reinvest it. It's entirely up to you. Now the key here is that quality companies will continue to increase their dividends year after year after year. Now here's a personal example of mine with the Trans-Canada Pipeline. In 2000, I bought 185 shares for a total investment of $2,479. Ever since then, the company has increased their dividend every single year from 80 cents a share to $2.26 a share. And since I've owned those shares, I've received over $4,600 in dividends alone. Now remember, I only invested $2,479. In return, I've received over $4,600 in dividends. So that is incredible. That's incredible dividend growth, and that's the power of investing. Now, if you look at the price chart of Trans-Canada Pipeline over that same period since 2000, you can see that the stock price has gone up and down many times, but the dividend has continued to go up and up every single year. Now, I know people will tell you that dividends are not guaranteed, and that's true. Companies can decrease the dividend whenever they want. Companies can eliminate the dividend whenever they want. So then how do you know what stocks to invest in or what companies to invest in? So the key here is to look at the dividend history. And there's two things to look at. Number one, how long has the company been paying dividends? And number two, how long has the company been increasing those dividends every single year? And when you look at those two things, that's going to give you the confidence when it comes to investing that you're going to be investing in companies that will pay you dividends and increasing dividends year after year after year. Let's take a look at an example. Coca-Cola has been paying dividends since 1893. That's incredible. Johnson & Johnson has been paying dividends since 1944. That is over 74 years of dividend payouts. Now, even more important are the consecutive dividend increases. Coca-Cola has been increasing their dividend every single year for 54 years. Even better, Procter & Gamble has been increasing their dividends consecutively for 60 years. So that is incredible growth, and as an investor, you want to take advantage of that. And that's how you are going to build your passive stream of income. That's huge. Whenever the dividends go up, your passive stream of income will also go up. Now, there's a couple of things to consider before you go out and buy dividend-paying stocks. So I personally use my 12 rules of Simply Investing to help me identify quality companies when they're undervalued. And that's very important. You want to buy dividend, quality-paying companies when they're undervalued. Now, we don't have time in this video to go through all of the 12 rules. So take a look at my website. There's a lot more information there on the rules at simplyinvesting.com. Click on the link here. This will take you to another video of mine where I explain exactly how to identify when a stock is undervalued and when a stock is overvalued. So remember, to build a growing stream of passive income, you have to invest in quality companies when they're undervalued. So thanks for watching. And don't forget to subscribe to my video channel for more videos coming your way.